Welcome back. If you're new here, my name is Chris and I run a small 3D printing business in my basement. 2024 just wrapped up recently and I was able to get all my taxes done. Today I want to walk you through how I'm getting prepped for my 2025 taxes and some things that you should think about along the way. Let's get started. Now, before we dive in, I just want to preface this. I am not an accountant, so everything I'm going to say in this video is just a recommendation and a good place to start along your journey in researching this topic. What I would recommend for everybody who's thinking about starting a business this year, whether you're going to be actually setting up a physical business or just doing it as side income, get an accountant. Frankly, they're not that expensive in the grand scheme of things. They'll probably save you some money that will offset the cost of hiring their services. But more importantly, they'll give you the advice and recommendations to be able to do this by the book and follow the law and potentially set your business up in a better way. Now that we got that out of the way, let's talk about how I had my stuff set up for last year. So last year, I actually didn't have a filed LLC. I just ran everything through my personal income and filed all within my personal taxes. Now, granted, that's not probably the best way to do things, but I didn't make an exorbitant amount of money to where that it affected me that much. All the money I made last year actually was saved in a bank account and I did not touch any of it. All of the investments and purchases I made came out of my personal account. So that way, when it came time for taxes this year and I owed the government money on some of that, I had all of the cash set aside to be able to pay them for that. In 2025, I'm going to have an actual business entity in which I will run my business through. In my case here in the United States, that's going to be an LLC. Now, there are other types of business filings that you can look at. Again, this is something that I would ask your accountant for, and they'll have a good recommendation. In 2025, I'm going to be following the book called Profit First to set up all the taxes and banking stuff for my business. His whole philosophy in this book is that as humans, it is our nature to spend up to or more than what we have. So we need to put in some safeguards to prevent us from doing that. He has a great outline of how you should set up a bank account that prevents you from spending all your money, but also allows you to focus on profit first. So you're making money first and foremost before anything else. So here's a quick rundown of how he roughly has it set up. So number one is as you make money for your business, it gets dropped into a bank account. And what he recommends is this is called the income account. From here, you can set up with your bank, and you can do this in a personal bank account at a lot of places, but also with a business account, to automatically portion out certain amounts of cash from this into other accounts. The other accounts that he recommends that you set up are a profit account, owner's pay, tax, and operating expenses. Now, based off of the book, he recommends focusing on profit first. That's the whole premise of the book, to make sure that your business can make money and not go insolvent. So what he recommends is from your income account, take 5 to 10% of your total income and put it into the profit account automatically. Next, he recommends take anywhere from 15 to 20%, but what I would actually recommend is doing 20 to 30%. This will make you on the safe side, and you can talk to your accountant to see if you can reduce those numbers some. Next, he recommends taking anywhere from 20 to 30% to put into your operating expenses. For a 3D printing business, this can be electricity cost, filament orders, boxes, shipping materials, all of those types of things. So lastly is the owner's pay account, and he recommends something a bit higher, but I would say based on our numbers, we're going to have anywhere from 30 to 40%. This strategy does quite a few things that are really positive for the business. Number one, the profit account forces you to make sure the business makes a profit. It's set aside and you don't touch it throughout the course of the year. Number two, make sure you pay yourself, because you do, as an owner, need to factor in how much money that you want to make on each product, so that way you can eventually survive and provide for yourself and your family from the business. Number three is taxes. Now, he has some pretty crazy stories in his book about how he had like mega tax bills at the end of the year because he did not keep track of this, and was actually somewhat of an inspiration to him creating this system. Again, highly recommend read the book. And then the most important piece is the operating expenses. So in this scenario, he's only setting aside up to 30% for operating expenses. What that means is he is saying that you can operate your business off of only 30% of what you actually make with your business. It forces you to be creative with your business. It forces you to look for efficiencies rather than spending money to solve a problem. And at the end of the day, will make you a better business owner. Again, I highly recommend you read Profit First. I think it is the most important book if you're just getting into business, or even if you've been in business but feel like you are missing the mark on a few things. pick it up at your library, go buy it if you want, but there are ways to get the book that is free. So please don't feel like you need money again to get something and get the information from this book. I know this video may have been not the most exciting, but I think it's a very important thing that everybody needs to know, and we are right in the middle of tax season. If you have any further questions or comments, please put them down below and I'll try to answer them in future videos. Otherwise, like and subscribe if you like what you see here, and I'll see you guys next week for another video.